Good morning, good morning, good morning. Welcome to apologies for the slow start. My spaces was a bit iffy. As usual, myself and Mr. Michael Brown will be giving a jump start to your trading day with an explosive daily market preview. Hopefully, give you some value, put a smile on your face, etc., etc. But before we do, I will get the legals out the way. As usual, nothing discussed in this spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed that of Mr. Michael Brown. How are you, my dear friend?
Very good morning, Ryan. Good morning, everyone, from an incredibly wet and grey city of London this morning. I'm
Yeah, it's a
sad to
bit
say
grey.
that summer in the UK is over.
Oh, well, it was good while it lasted.
Indeed. And of course, bank holiday weekend coming up, so we know what that means in terms of the weather.
What, this weekend?
Yes.
Oh, I had no idea. I'll be in Croatia regardless, so poke it.
Bloody hell. What on earth are you doing? I thought Zach was the one who had a lot of holidays
No,
around here.
Croatia this weekend and then Vegas from the 4th of June. So might be the end of the morning blast.
Well, yeah, if Croatia isn't, Vegas certainly will be. I will be taking applications for a new co-host from the 4th of June. Please write to me at Mike Brown, Pepperstone Towers, London.
The pub.
Yeah, the jam pot.
Right, what's been occurring?
Oh dear, right. Yes, we probably should crack on rather than talking about Ryan's impending death. Good morning once again, everybody. It was we saw a little bit of a pause for breath yesterday in the risk rally that's been going on. The S&P 500 closing down by about 0.4%. The Nasdaq losing a similar amount. Of course, the S&P snapping a 6-day winning streak, and futures also just softening a little bit further this morning. I don't think this is too much to worry about, to be completely honest with you. It was a relatively light day in terms of catalysts yesterday, and of course, when the market has gained such considerable ground in such a short space of time, it's no surprise to see us take a little bit of a pause and the bulls get a little bit exhausted. In terms of markets elsewhere, it was really a theme of more of the same, with the Treasury curve continuing to bear steepen, the 2-year yield remaining just shy of 4%, the 30-year yield rising 6 basis points, and this morning trading back above 5% once more. That more of the same vibe also coming into the foreign exchange space, with the dollar broadly softer against most peers as the dollar index tested 100 to the downside, and during the Asia session we've lost a further third of 1% and trading below that 100 mark in the dollar index. In turn, that has taken the euro north of 113, cable back above 134, although we'll get onto why cable has moved momentarily, and all other G10s trading firmer against the buck this morning. Gold also a little bit firmer, north of $3,300 an ounce once more, while we also see a little bit of upside coming into crude this morning, although we are some way off the highs after those reports overnight that Israel may be looking to strike the Iranian nuclear facilities. But I'm sure Ryan will cover more on that in due course. In terms of data over the last 24 hours or so, we had inflation figures out of Canada yesterday, which came in substantially below the prior print, with CPI rising by 1.7% on an annual basis in April, down from the prior 2.3%. That said, the core metrics were firmer than the prior prints, with the median rising to 3.2% and the trim rising to 3.1%. And as a result, we saw some strength coming through in the loonie, and we also saw the Canadian money markets slashing their odds on a 25 basis point cut on the 4th of June. That is now priced as about a 1 in 3 chance compared to about a 70% chance before that CPI data. Sticking with inflation, we may as well get this out of the way now. We have, of course, this morning had the latest inflation figures out of the UK. A bit of a nasty surprise for the folk down on Threadneedle Street this morning, with headline CPI rising by 3.5% on an annual basis in April, above both the 3.3% that market participants have been expecting and the 3.4% that the BOE had forecast. That headline inflation print the highest since January of 2024. Underlying price pressures, also price metrics, I should say, also rising. and above expectations, with core CPI coming in at 3.8% on an annual basis, up for a prior 3.4%, and the closely watched services metric that rose by 5.4%, up from the prior 4.7% and the highest level since last August. I would just caveat this data though by saying that it's probably not as bad as the headline metrics make out. Of course, we all know that April is a month where we see a whole host of index-linked price rises here in the UK. There was also an incredibly unfavorable base effect in the data from energy prices, which this April rose by 6% compared to last April, where they actually fell by 12%. So that's not going to help things at all. Also, the survey period was very, very close to Easter. So we saw accommodation and travel prices a lot higher than they otherwise would have been. Nonetheless, that inflation data probably does mark the final nail in the coffin of the idea that the BOE deliver another rate cut at the June meeting. And money markets now pricing about 35, 36 basis points of cuts from the BOE by year end, so marginally in favour of just one more rate reduction from Governor Bailey and his colleagues before 2024 is out. In terms of other bits and bobs to cover off this morning on the trade front, there were a few reports yesterday. The first on these ongoing negotiations between the US and Japan. Japanese representatives will be back in the United States on Friday, incidentally. Kyodo, the Japanese outlet, citing their sources, they noted yesterday that Japan is reportedly considering whether to accept a tariff reduction as opposed to a tariff exemption from the United States as part of the ongoing negotiations. This shouldn't be particularly surprising because it seems to be that this 10% baseline tariff is going to stay in place for the vast majority of countries, no matter what deal they strike.
Yeah,
So this
exactly.
feels like Japan sort of waking up and accepting the inevitable as opposed to any sort of major breakthrough,
Also,
which remains elusive.
I do kind of think we do know that Japan aren't in a well, they're kind of trying to push back a little bit. Everyone loves a good pushback story about trying US trying to fix them into a quick deal. So I do
Mm,
wonder if this kind of halfway house is just a means to an end, and it won't be like the final outcome, but it's just an outcome to keep the Trump administration appeased. Because as we know, the Trump administration are currently drawing up letters to send to countries that haven't even engaged with them yet.
yes.
And they're going to say, look, you've not even picked up the phone. Here you go. We don't care about the 90-day pause anymore for you. That's for people that are working with us. There you go. So here's your random number. So maybe Japan are doing this just to kind of appease the administration and say, look, we are willing to work with you. We just need a bit more time. So again, it's nothing straightforward in this game.
No, absolutely not. And speaking of appeasing the Trump administration, we had news out of the European Union yesterday that they're planning to impose this is according to the Financial Times, they're planning to impose a €2 fee on small imports into the bloc. This is specifically targeted at companies like Temu and Shein, of course, the Chinese fast fashion retailers. This also does feel like a little bit of a nod to the United States and to the
Yeah.
Trump administration, even though the EU are dressing this up as a fee which is
Well,
supposedly aimed at, and I quote here, reducing the number of unsafe or non-compliant goods and their access to the European Union's market.
whoa, whoa,
What a
whoa,
load of
whoa, whoa,
nonsense.
whoa. So does that mean I'm going to be charged an extra €2 when I go to Croatia?
No, the smallest of small packages are exempt, so you should be fine.
Oh, okay. Thank you. No, I just thought harm to the local economy.
Speaking of the EU, we had news
Oh God, I
yesterday
wonder
that
where this was going.
no, 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 no. Don't, well, I hope this doesn't involve you. They have approved their 17th sanctions package against Russia. This package targeting Russia's shadow fleet and other hybrid threats. The EU following that time-honoured tradition that if at first you don't succeed, then try, 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 try,
You know
try,
what they
try,
say?
try, 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 try again, which seems to be the modus operandi of the EU. And we heard from their not their foreign secretary, foreign
Person.
representative yesterday, saying that they are already working on an 18th sanctions package because
Well, I was
that will
gonna say,
obviously do the trick.
you know what they say? It's that famous phrase, isn't it? 18th time for the charm. But yeah, we'll see what happens. Um,
They'll need
it's just
another
a
Brussels
complete
summit beforehand.
yeah, it's a complete shower shit, isn't it? That if you really cared, you'd go all out in one hit. And you know, this if they haven't realized by now that slow increments of tariffs and sanctions, sorry, if they haven't realized by now that these small increments, oh, another couple of ships doesn't work. When are they going to work? They're never going to get there, are they? It's
No,
absolutely ridiculous.
you're absolutely right, and our mutual friend Yuresh summed that up very well yesterday, basically saying that the entire endeavour is completely pointless. Moving away from the European Union, here in the UK, we heard out of the Prudential Regulation Authority yesterday, who are, of course, the BOE's regulatory arm. They are going to raise some thresholds around FSCS covered deposits. Now, just for clarity, this is a threshold regarding the amount of deposits and the number of different customers from different types of customers, so large businesses, small businesses, and individuals, that each regulated institution is able to cater for. Basically, what the BOE have said is we put in place these thresholds about a decade ago. Inflation is up by a cumulative 30% since we put those thresholds in place, and we should probably raise the thresholds by a similar amount because it's getting to the point where it's actually harder for banks to compete and do business
Yeah,
in the UK because they're butting up against these thresholds. This does not yet relate to the individual FSCS coverage amount, which is currently at 85,000. That is the amount that's protected should a bank go under. That limit, though, is likely to also be raised at some point later this year, probably to 110,000, although we still await confirmation of that. But just worth noting, there have been quite a few stories on the UK banking sector of late. And if the Chancellor is looking to make the economy more competitive, then cutting red tape around banking is probably not a bad place to start. Moving away from that and into the tech sector,
oh
news
god.
yesterday. Oh God, honestly, news yesterday via Reuters sources that Intel is apparently exploring the sale of something called NEX, which is its networking and edge unit. Answers on a postcard, please, if you know what edge is, because I haven't got a bloody clue.
I love a bit
Meanwhile,
of edging. Oh god,
oh,
Ryan.
oh,
Oh
Jesus
god,
Christ.
quick move
Moving
on. Oh no.
swiftly on, Apple is going to open its AI models to developers in a bid to spur new apps. Of course, among all of these sort of tech behemoths, Apple is probably the one that is struggling the most in order to get AI off the ground. This plan is reportedly going to let developers tap into Apple's large language models, and it's going to be unveiled at the WWDC event on June the 9th. Well, no, it's not, because it's already been unveiled. Sticking with the AI space, a company called Builder.ai, who I'd never heard of, but they're a UK-based startup apparently, and they're going to enter insolvency proceedings as soon as today.
Oh,
So it seems like they've been demolished. And last but
oh
by
god.
no means least, I will end with earnings this morning from our favourite company, Pony AI. And
Yes.
actually, they were anything but. Revenues rising by 12% year on year to 14 million. Net loss
Giddy
being
up.
trimmed a little bit, and the ADRs jumped 15% after the results. So the stock galloping higher yesterday.
Oh, giddy up. Whip that nag, you slag. Yeah. I
Jesus
seriously,
Christ.
do you know what? I'm distraught because we did say yesterday that maybe we should have a little punt given it is like the morning blast preferred measure of AI.
Well,
Um,
do you know what? It is. For in case my compliance are listening, we don't offer trade ideas or advice on
no,
this program, but
no,
it is a bit of a kick in the teeth that probably the best performing idea we've ever had is one that we suggested as a laugh.
yeah. I think to be honest, it
Not
sums
sure
up the
what
whole
that says
payments
about
world.
our
To be honest.
prowess, to be honest.
Yeah, yeah, massively, massively. Michael, thank you very much for that. So quickly run through some of the key headlines from our always awesome overnight news roundup. Michael, close your ears on this one because I've just been informed by the author of the overnight news roundup that there is not going to be one tomorrow because
Why?
yeah, Judith Chalmers apparently is doing other things. So
Oh,
yeah, so Zach's having a day off. Yeah, so make the most of this
lucky
one.
him, I suppose. Bloody hell.
Well, yeah, I guess he's got to get down the travel agents and book his next holiday. I don't know. But anyway, moving quickly on. So in trade headlines, China vows to a legal showdown over US Huawei AI chip ban, rattling a fragile tariff truth hopes. That's according to Bloomberg. The freight frenzy grips China US routes, bookings soaring 228,000 TEUs as 90-day tariff cuts spark the rush. I did mention this yesterday when there was we were talking about the May data being quite lagging, and we kind of say, well, yeah, just wait and see what the June numbers are like. US Commerce Department gears up to slap anti-subsidy duties on China's battery components, citing unfair aid. In G7, led by Canada's Champagne, mulls tariffs to curb flood of cheap Chinese goods. Again, kind of like what Michael said about the EU earlier on. Feels like countries are doing this a little bit under the pressure of the US to do so. So, interesting one to keep an eye on. US importers are scrambling, turning warehouses into tariff-free havens to dodge Trump's duties. I guess these are like free ports, right, Michael? Have you heard anything about this? This is according to Reuters. Yes, so it looked like we could be having a little number of little free ports opening up in the US. Japan's US exports stumble in April, reeling from Trump's tariffs hammer. Toyota, Sony, and Mizuho brace for $27.6
Sorry,
billion.
sorry, Ryan. What was the name of that company? I didn't quite catch that.
Yeah, Mizuho. Brace for
Just don't do the eyes.
Yeah, oh, 27.6 billion profit blow from US tariffs, the FT warns. UK's Reeves and US Besant race to seal tariff cut deal, eyeing smoother transatlantic trade.
Hang
South
on, hang
Korea's,
on, hang on. I thought we'd
yeah,
agreed the biggest and best deal that the world has ever seen.
yeah, it's the biggest and best framework, mate. Catch up. It's the best framework you've ever seen. Um, South Korea's US export slump as Seoul battles for tariff relief in tense talk. They've got a bit of a problem here because the South Korean government or lack of government have said that there's not going to be any deal until potentially July when they do have a functioning government. So it could be a rough couple of months for the South Koreans. In macro news, IMF chief sounds alarm over US's ballooning deficit, urgent action to tame soaring debt. Um, this is just a ridiculous ridiculous statement from them because nothing's changed. The only thing that's happened is Moody's have finally caught up, and all of a sudden now you're alarmed by it. It's
Mm.
do me a favor. The House's GOP blue states rebel and near the SALT deal. And you've been talking about SALT deal yesterday. On our grain market blast, eyeing a $40,000 cap to save Trump's tax bill. Fed's Hammack and Daly play it cool, urging pause amid Trump's policy whirlwind. Don't blame them. Fed's Bostic fears price surge as firms exhaust tricks to dodge Trump's tariff sting. Trump's approval slips to 42% with Americans souring on his economic playbook. Stigma Trump, he's eyeing a bold move to unleash 9 trillion with a T retirement market for high stakes private deals. Non-US equity funds see record inflows as investors shun Trump era US markets. Moving over to Japan, the manufacturer's mood darkens in May, again rattled by Trump's tariff unpredictability. Something that we've been saying for a long time is not so much the final number, it's just the uncertainty, the unpredictability, which is making life almost impossible for manufacturers and producers of things. UK inflation, as Michael alluded to just now, rockets to 3.5% in April, fueled by soaring energy and tax hikes. But as Michael also said, potentially this could be just a little fly in the ointment, and maybe we drop back down next month. Hong Kong dollar teeters near trading band's edge as low rates ignite the carry trade bets. So one to look out for a bit of intervention on that front. Geopolitics, oil surges as US intel hints at Israel plotting strikes on Iran's nuclear sites, defying the Trump request to kind of hold fire on that one. Again, one to keep an eye on this because it's very likely that if they do anything, their kind of modus operandi recently is to act first and then alert the US government. This goes against what is historically been the case of they kind of let the US know that this is what we want to do. The US kind of diffuse the situation, or at least they're aware of it before anything happens. But in the past few years, we've seen Israel shooting first, asking questions later. So if anything does happen, not only will we be looking at the Iranian response and that of the Iranian neighbors, but also that of the US themselves, because obviously, as we know, it's a bit of a political shitstorm over there at the moment. So one to keep an eye on, definitely.
Yeah, and of course, for those who are unaware, Ryan, did used to trade a bit of oil, so he does know what he's
Yeah.
on about here.
I don't remember those days, but yeah, apparently I did.
I wonder why.
US and Oh, moving on. US and Philippines flex naval muscle in the South China Sea, countering regional flashpoints, by which we mean China. Equities, just some headlines from here before I move back to my dear friend Michael in the studio. It's just studio. Musk teases AI Tesla merger, unveils plans for massive 1 million GPU Tennessee AI hub. Answers on a postcard, please. Nvidia's Huang slams Biden's chip curves as costly flop. Eyes 50 million, 50 billion, so over B. China AI market boom. Super microcomputer ramps up US server production to ride global AI demand wave. Kraft Heinz hunts for strategic deals as economic uncertainty dents consumer demand. That's according to Reuters sources. See what I did there? Ford dials back
Deary
EV
me.
dreams, shares US battery plant with Nissan to chase hybrids. Fortnite, I assume this is the game, storms back to US App Store after epic 4-year legal clash with Apple. US life insurers shift $1 trillion with a T offshore, sparking fears for retirement savings stability. That's according to the FT. Toll Brothers, they hold firm on their yearly outlook, betting on luxury housing enduring. TSMC snubs fab offers from Qatar. I believe fab here refers to fabrication, not just like, yeah, groovy, man, fab. But they snub fab offers from Qatar, Singapore, and India despite heavy subsidies. And finally, for me, Quanta's AI server sales skyrocket with triple-digit growth and capacity is maxed out. I've got no pun on that one. I forgot to
Oh,
think of
oh, that's a shame. I was expecting you to end with a flourish as you usually
Sorry, I
do, but
should have, yeah, I should have kind of reordered them and kind of did my Kraft Heinz one at the end, but I panicked. I apologize.
Oh, on the subject of Heinz, we could
Panicking.
talk. We could start talking about ketchup, but
Oh,
I know that's
let's
your
not. Let's move
favourite
on because
subject.
Angie's also listening. So quick, move on, move on.
That's why I mentioned it.
You bastard.
Come on, mate. Right, where are we today? Yes, I'm very pleased to tell you actually that the data docket, now the UK inflation data is out of the way, is almost entirely barren for the remainder
Yeah.
of the day. There are, in fact, no notable releases throughout either the European or the US trading sessions. There are a few things to note, though, on the calendar in terms of other scheduled events. We do have a 20-year bond sale out of the United States at 6 o'clock this evening, London time, $16.16 billion being auctioned off. On the speaker slate, we are due to hear from the ECB's De Guindos, Centino, Lane, and Escriva. Some calendars also have President Lagarde scheduled, but the Bloomberg one does not. From the Fed, we are due to get remarks from Barkin and Bowman, although Bowman is on the calendar with a big note next to her name saying she will not say anything. So, not entirely sure what she's doing at that event. And then on the earnings front, before the market opens today, we are due to hear from Target. Interestingly, we heard from Home Depot or Home Depot, depending on where you're based, yesterday, saying that they will not be passing on tariffs to consumers. Clearly, not wanting to get a bit of a tap on the shoulder like Walmart did last week. So we'll see what Target have to say later on. And then after the market close, we're due to hear from Snowflake, who are some kind of AI tech data firm. I was told
I
they're
love it when
important.
we talk AI and tech.
Yeah, absolutely. Apparently, Snowflake are important, so if you're into that, then watch those. And we also, after the market close, hear from Zoom as well. And of course, sadly, we're all too familiar with who they are. And of course, the standing warning that we are still on alert for any trade, tariff, and geopolitical headlines as well. And for the time being, that's it from me.
Wonderful. Absolutely magnificent. Thank you, Mr. Brown. Listeners, as always, I know I always say it on every show, but we do really, 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 really appreciate you listening in. Hopefully, we had some value and potentially, maybe occasionally put a smile on your face. From me and my dear friend Michael Brown, we hope to see you all again tomorrow. Whatever you're doing today, stay safe. Remember to factor in the fuckery, and yeah, much love.
Indeed. And Zach, enjoy your latest holiday. Bye for now.